Hi everyone and welcome to my morning report analysis videos on Thursday the 20th of September with me, Richard Perry, market analyst at Hantec Markets. We have an interesting move on the markets. They continue to show risk positive outlook coming from the trade dispute escalation this week. US and China seems to have sort of escalated the trade dispute, but perhaps not as much as expected, and subsequently there's been a risk positive outcome from that. The dollar's been weaker, that continues to drift away. We've seen equity markets stronger, S&P 500 pulling higher again. The VIX volatility is down, that's back at levels not seen since late August. And it all generally sort of pointing towards an improvement in sentiment. You can see that copper has started to pick up again. That's again sort of playing into the risk improvement there. You've got the Chinese yuan, which is sort of holding its ground really, but sort of edging a little bit of gain against the dollar as that comes through. Now this is interesting because the dollar is under pressure, as we can see here, amidst the fact that the 10-year yield is rising strongly. So the 10-year yield rising strongly is not gaining any traction for the dollar whatsoever at the moment. So that is interesting. That is again suggesting that yield differentials are not playing into the moves on the dollar. And there's just one chart I'll show you on this where you've seen that the 10-year yield spread of the Bund under treasuries has been falling away in September, even though the euro has been rising, and normally that is a positive correlation. So that's interesting. So that continues to be the case. Now, what we have also is, let me show you, is equity markets, which have been stronger. Where is it? Sorry, equity markets have been stronger across the board. S&P 500 up, futures ticking slightly higher. Asian markets sort of mixed really, nothing too decisive there on Asian markets. Shanghai B as well, slightly lower. However, we have seen European markets taking the lead this morning, bit stronger. DAX and CAC certainly, FTSE less so. There's a Brexit situation which is going to be impacting on markets today. The EU summit in Salzburg, big talks surrounding Brexit, and pound will certainly be reactive to that this afternoon. You've also got on the data front as well today, retail sales for the UK is going to play a key role potentially. Retail sales come out at 9:30, expected to show that there was a slight slip back in August, month on month, following on from a very strong July, and that would take the year-on-year data back to 2.5% on UK retail sales. But there's also some US data this afternoon. We're looking out for jobless claims, again around 210,000. Philly Fed improving, actually, meant to be improved to 17. And then the existing home sales at 3 o'clock, again expected to improve slightly by 0.3% to 5.35 million. So that takes me to my chart today, which is the Aussie dollar, which has, I looked at Aussie yen yesterday amidst the improvement there, and we can see that continued improvement coming through on Aussie dollar versus the US, which has broken out above a pivot near term. 72.30 area being that pivot that we've seen, a little bit of a head and shoulders reversal pattern. So that implies a move of around about, well, around about 140 pips or so of recovery, and that would certainly take you into the sort of resistance band that we've got here around the that late August high of 73.80 area. Comes back into play as your resistance area. But look at this, the downtrend. This downtrend that's been in place since January would then be tested quite significantly. Also the overhead supply of 73.10 area, all those old lows from June, July area, so they come back into play as well. So this is a really key improvement that we've seen on the near-term aspect of the little base pattern, but now we need to see a breakout above the downtrend, above the breakout resistance at 73.10. We've seen the momentum indicators which continue to improve on stochastics and MACD lines especially. RSI needs to sort of hold above 50, I think, to really suggest that we are sort of showing significant improvement, because it's back at levels at where the recent rallies of recent months have sort of fallen over. So this needs to continue to improve. The neckline resistance, the old neckline resistance, becomes supportive on this move. So you're looking at the breakout 72.30 becoming supportive, and then back at 70. Well, in yesterday's low, 72.10 basis of support as well. So, but you wouldn't see a deterioration necessarily until 71.40 were breached, because that is the higher reaction low now on this daily chart. So improvements on the Aussie, but still needs to overcome some hurdles ahead. But I wish you good luck in your trading, and I'll speak to you later.